In this video, I'm going to teach you how to get a loan for a travel trailer, motorhome, toy hauler, fifth wheel, just about any type of RV with what we refer to as fair credit. Welcome to HB RV Lifestyle. They call me the honey badger because I give it to you straight and transparent about the RV business. And I'm going to break this down into three sections. The first section is I'm going to take the complicated mess and simplify it for you. So we're going to define fair credit, but it's going to sound really complicated. I'm going to try to simplify it for you so you have a better understanding, because FICO score isn't everything when it comes to defining what they consider okay or fair credit. The second section, we're going to talk about interest rates, terms of the loan, stipulations, and the differences between used and new. We're also going to be talking about down payment because that's really important. And lastly, we're going to talk about where to get these loans, whether you're going to buy from a dealership or whether you're going to buy used from a used from a private party. Now, I do want to apologize. My voice isn't 100%. My nose is completely stuffed, so this will probably have bad sound quality. Want to give that up front. Now, if this is the first time you've seen one of my videos, I have over 16 years of experience in the RV dealership part of the industry. I've been a finance manager, a sales manager, salesperson, porter, technician, service writer. I've worn just about every hat at the dealership level. Now, to define fair credit, or what they say okay credit might be another terminology for it, we have to look beyond FICO score. But if we're going to say there's a FICO score range, it's normally between 670 and 720. I know 705 isn't a good FICO score. It is in the auto industry. When we're talking about getting a car loan or a truck loan or even a mortgage, it's actually considered to be a top tier FICO score. But when it comes to boats and RVs, it's actually considered what they call subprime credit. So in the RV world, if you actually go to a lender, there's good and bad credit. There's really nothing in between. If you're under 720, you're considered bad credit or subprime. If you're over 720, you're considered prime credit or good credit. But there is a middle ground that I have found over the last 12 years. It's just a matter of knowing how to look at it. The other thing we have to realize is FICO score also isn't everything when it comes to good versus bad credit. I'll give you a really weird example that's very rare, but I've seen in the past 12 years a person have a 785 FICO score, have really good established credit, but 7 years ago had a bankruptcy. They're considered bad credit. They're considered high risk. Even with all the reestablished credit, the prime lenders won't deal with that person. So they don't qualify for like a 20-year loan. They won't qualify for the prime interest rate when it comes to the basics of lending on a travel trailer or a motorhome or a fifth wheel. But I have found that I can put those folks into the category of fair credit. I've also seen on the other side where I've had a 655 FICO score that has no collections, no problems, pays their bills on time, but they just have heavy credit card debt. They might be self-employed. They might have a business where they run a lot of their operations off their credit cards or what they call revolving debt. And then they pay off that debt as they go along, as they get their accounts receivable. That being said, those people can fall into the fair credit assessment as well. So that's why I'm saying FICO score isn't everything. But if we had to make a definition or give you a range, it would be 670 to 720. Okay. Now, The other part about fair credit is if you have collections and you're a 735 FICO and you've got medical collections, a cell phone collection, a utility collection, you're not going to be considered fair credit. You're going to be considered subprime. I'm sorry. And I know that's probably going to piss a lot of you off, but it's not meant to make you mad. It's meant to educate you. So that way you have an understanding if you're going to buy something in 2026, 2027, 2028, and beyond, you have an idea, hey, wait a minute. Okay, so now I know how I either need to get rid of on my credit report, or this is where I need to shop so that way I can get the best interest rate, best price, and best payment possible. And that's a great segue into the next segment. The next segment is we're going to talk about interest rates and terms. Okay, so when we talk about the terms of the loan under fair credit, this is going to be a very wide range because the lenders that we're going to use as a dealership or you're going to use to make a private party used purchase has very different conditions than the traditional RV lenders. So I'll give you an example, okay? When I sit here and tell you, hey, a 620 FICO score max term is going to get 12 years on a $50,000 loan, I can pretty much stamp that there's very few exceptions. And with prime credit, you could get up to a 20-year term if you're financing over $50,000. And again, I can stamp that there's very few exceptions to that. But with fair credit, you can get as little as a 3-year loan and as much as a 15-year loan. There's no lender that will do 20-year loans with fair credit, no matter what you're borrowing. And there's one exception, and that exception probably won't exist by the time you're ready to buy because they're shutting down their RV operations and going strictly to auto. Now, how does that work, or why does that work? Okay, so when we're talking about fair credit, we're talking about, let's say you're a 710 FICO score, and we're going to a credit union through the Cuddle program or Dealer Direct, where we call them and say, hey, call this customer and just let me know when you have the cashier's check. Done a lot of those deals in my life, okay? We're looking for an interest rate that is not 12%, 13%, 15% like we would with a subprime lender. We are looking for 8.99, 9.5, 9.74. But a lot of times when we get that interest rate, the term might only be a 5-year term or 6-year term because credit unions borrow differently than traditional RV lenders that are dealer direct through an application called App One or Dealer Track. So when we are looking at our book and we have an interest rate buyer more than a term buyer, which means they don't really care about the payment. They can be flexible with the payment, but man, they really are 705. They pay their bills on time. They really, really don't want to pay 13%, even if it makes the payment lower. That's where we have to go to these other types of lenders, which are mainly credit unions. Now, there's nothing wrong with a credit union. Now, the biggest difference between a credit union and an RV or traditional RV bank is the credit unions are generally going to be starting out at a higher interest rate, but there's no markup. Okay, so right now, the US Bank, Bank of America's, M&Ts, BMOs, they all set a buy rate with a dealership, and the dealership marks it up. Now, even with the marked up rate, the dealership is still cheaper than the credit union. But when it comes to fair credit, the credit unions are always going to be a lesser interest rate, and they don't mark up the rate or have the dealer mark up the rate. They just usually pay a flat 1%, 2% of the amount financed. So there's no what we call dealer reserve. But again, if you're borrowing $125,000, you're not going to get a 20-year term on that loan. Now, that also brings a downside. And the downside is the downside to that interest rate and that flexible term is that these credit unions, in general, with very few exceptions, want 10 to 20% cash down to make the loan work. Now, unlike prime banks like M&T and US Bank and BMO, et cetera, who have zero down programs for good credit customers up to certain dollar amounts, these fair credit institutions do not have zero down programs. Now, there are some exceptions to the rule, very few, very far between. There are people who claim, well, I put zero down, but then I go look at the deal that they tell me in private and they had a trade. Or the dealership played around with the numbers, if you get my drift, and basically watered down the down payment. Of course, dealers don't do that, right? Sorry, a little sarcasm there, a little dealer humor. Okay. Now, the other stipulations that these lenders are going to want you to have and want you to do is they are definitely going to want you to also have, more than likely, proof of income and proof of residence and a driver's license. And a lot of these lenders are going to want you to open an account with the credit union to become a member. Also, a lot of these credit unions, no matter where you're at in the United States, Canada, etc., want you to also live within a certain county or a certain state or certain city that they service. Some of them, it might be you have to be part of a union. Some of them, you might have to be a part of the military, like Navy Federal, USAA. You either have to be a member of the military or a family member of the military that is sponsored. So there's a lot of stipulations with every credit union and all these, I would say, outside type of lenders. There's also sourced lenders like Southeast Financial and things of that nature. And that's a great segue. But first, I want to cover interest rate before I segue into where to get the loan. So interest rates to be expected can be, depending on the term, can be as low as 8% and can be as much as, of course, 11 or 12%. Now, it depends on the term and the bank we go to. Golden One Credit Union, if you're a 725, 730 FICO and you fit in that fair credit assessment, you're going to have a 7-year term at probably 8%, 7.74. If we're going through a bank like Alliant Credit Union out of Chicago and you want a 15-year term and you have a 710 FICO, you're probably around 10.49, 10.99. So it's all going to range based on the term of the loan, how much you're borrowing, and what your history is, plus the percentage of down payment. So obviously, the more money you're going to put down, the shorter the term you're going to take, the better the interest rate. That doesn't always mean a lower payment. Now, also, I want to cover this, new versus used. You're going to need the same amount of money down for a new one as you are for a used one. So if on a new one, that's, let's say, 30 grand, the dealer or the manufacturer, or not dealer, the lender says you will need $3,000 down. More than likely, the $15,000 used trailer, you're still going to need $3,000 down. So just keep that in mind as we go along. Now, that's a great segue into the last section is where do I find these loans? Where do I get these loans? And I've already kind of talked about some of the institutions, but let's say you're going to buy private party or you just want to have a comparable to shop the dealership if you're buying new or used, right? So the best way to go about it is probably Alliant Credit Union. They're based out of Chicago, but they service nationwide. Unify Federal Credit Union, they service nationwide. And also you want to look at Southeast Financial. Now, all three of these credit unions and financial institutions are a little bit of a pain in the butt to get all approved and ready to rock and roll. And they're going to tell you things in their descriptions that make you think you don't have to put any money down, that you can qualify for 6% rate. But at the end of the day, you have to go through the full process and get the full approval letter to actually see what you qualify for. Now, I'm going to put the links to all three. Now, I'm not affiliated with any of those banks, okay? This is plainly for you to go walk into the dealership, and if you're approved for 11% with Alliant Credit Union, and you've got a 12-year term or 10-year term at that rate, and the dealer's best rate is 13.95 over 15 years, it gives you the ability to go either way. Because at 13.95, the dealer's not making any money. When we talk about rates and terms that are above 13, 14, 15%, the dealerships aren't making any money on that. Okay, that's like it's a cash deal to them either way. They might lose a 1% or 2.5% little gift from the bank saying, hey, thanks for the loan, but there's no markup. While when you have good credit or prime credit and you're getting 7.49 or 6.74%, the dealership's making money on that. So it's a big difference. Like in the auto industry, that subprime stuff is where all the money's made, right? When you go on with bad credit or fair credit to buy a truck or a car, that's where the dealership makes all the money, is in the markup of the interest rate. Because what they call dealer reserve is calculated differently in the auto world than it is in the RV and marine world. Everything's calculated different because it's a different type of loan, different term structure, different everything. Okay. When it comes to RVs, subprime loans or fair credit loans aren't big money makers for the dealership on that side. Good credit customers, they're 760, 780, 800. That's where the money's made. Dealerships want to see those people. So if you're always wondering why dealerships don't work really hard when you're a 685 FICO score, why the big dogs really don't care if you buy or not, it's because there's no money involved. They have to pretty much give the unit away, not make any money on the back end. Very hard to sell a warranty for any kind of profit because the limitations with those loans. And there's no markup in the interest rate like there is if you're a 770 score buying a Brinkley fifth wheel as an example. Okay, so just to give you guys an idea, when you walk in, if you tell the dealership, you know what, I like your loan, thank you so much, I'll pay the extra $30 a month because I got a better rate and a shorter term with this credit union. They'll go, great, bring me a check. And then they'll sit there and try to sell you a warranty and sell you this stuff because they can actually do that. And that's up to you if you purchase it or not, right? Now, if you want more information, let's say that you think maybe I fit more in the bad credit category after watching this or the good credit category after watching this, click on this playlist right here in the top right-hand corner, and that will take you to all the finance videos I've done, and maybe that'll help you actually see those type of things. So until next time, remember that RV stands for toolkit and sense of humor.